what the heck just happened to the stock of Bed Bath & Beyond? Last night, the downtrodden retailer reported not so hard quarter, and the stock imploded today, plummeting more than $3 or close to 20% to finish at a lowly $13.45. This on a record close day for the averages. Sheesh! Now, normally Bed Bath & Beyond missing numbers would not be that much of a surprise. I mean, that's a real dog bites man story. This company spent the last 5 years trying and failing to get its act together, with the stock steadily sinking, lower and lower and lower. But last year, we finally saw some big changes that got investors hopeful about a possible turnaround. A trio of activist hedge funds, led by John Duskin at Macellum Capital Management, waged a proxy fight against Bed Bath's board of directors, pushing for radical change. And they won! These activists ousted the lackadaisical CEO. They got themselves some board seats, and 3 months ago, they brought in Target's terrific chief merchandising officer, Mark Tritton, to run the company. This was an incredible hire. After years of value destruction, Bed Bath looked like it was getting its act together. And it sure didn't hurt when the president signed a phase 1 trade deal with China, taking some major tariff worries off the table. You know, if you've been to Bed Bath, they sell an awful lot of stuff that is subject to tariffs, although they make most of the stuff here. Odd. That's how Bed Bath & Beyond could rally from $7 at its lows in August to $16 yesterday. Suddenly, everyone was really excited for the turnaround, right up until the company reported another seemingly hideous quarter last night. And that's why the stock got obliterated, sinking back to 13 and change. But, and this is a but so big, it would make Sir Mix-a-Lot proud. I think you have to view this shakeout, yes, as a buying opportunity. Yep, I still believe in Bed Bath & Beyond's turnaround. I say that as someone who hated the stock nearly all the way down before the activists won. From the 60s to the teens, I told you this thing was a sell. Now, though, the story's changed, and I think it's a buy. While the quarter was certainly ugly, upon closer inspection, there's some legitimate green shoots that give me confidence in the future that no one talked about today. In short, the people dumping this stock down almost 20%, I think they're making a mistake, and now I'm going to tell you why. Before we get into the specifics of the quarter, though, you need to know the context. I recommended Bed Bath 3 months ago when the company hired Mark Tritton, and the stock was trading at $12.30. He had a 38% rally from those levels as of yesterday, and even after today's wipeout, the stock's still up 11%. However, the business was in really bad shape. Oh, boy, was that for certain. I got behind Bed Bath because the company had a ton of room to improve, and with a competent CEO, improvement finally seemed like a serious possibility. But you can't work that kind of magic overnight. Before Tritton came in, Bed Bath was a retailer that had failed to adapt to the e-commerce era. I mean, what were they really about? It's hot in here. Oh, yeah, coupons. After years of half-hearted attempts to rejuvenate the store, management decided to compete on price, entering a spiral of ever-shrinking gross margins and declining same-store sales. Basically, the former CEO made some disastrous choices, and now the new guy needs to fix them. While he's only been there a little over 2 months, Tritton has already started taking action. That was not reflected by anybody when they dumped all over today. Over the course of December, he broomed most of the management team. Smart. This Monday, he completed a sale-leaseback transaction, selling the real estate under many of his properties to raise $250 million. Still, Tritton came in during the middle of the latest quarter, and he simply didn't have enough time to work his magic. So when Bed Bath reported last night, the numbers were heinous. They lost 38 cents per share. Wall Street was looking for a 2-cent profit. Their same-store sales shrank by 8.3%. Analysts were only expecting a 4.8% decline. Worst of all, Bed Bath flat out withdrew its full-year guidance. Instead, the company told us their sales and profitability would remain under pressure during the next quarter. They gave you very little hope, not even trying to forecast the scale of the pain. I mean, this thing was brutal.
The House of Pain.
On the conference call, Mark Tritton humbly admitted, quote, "These results are unsatisfactory and underscore the imperative for change," end quote. We want that. He warned us that, quote, "The path to achieving our objective will not be linear, as evidenced by our third quarter results, but we will move quickly to course correct, and drive the business forward," end quote. Well, it makes sense that the stock would get obliterated today, but like I told you, there's more going on here if you look under the surface, which is why you need to hold your nose and buy Bed Bath after this carnage. Buy! I know, totally contrary call, but give me a chance. My reason. First, this was a kitchen sink quarter. Mark Tritton took over a troubled company, and now he's trying to reset expectations. So he threw everything negative at you, including the kitchen sink, and maybe at everything that goes near it that you can buy at the store. However, if you bothered to listen to the conference call, which I think most of the sellers did not, there were some real positives. So I'm going to tick them down in the interest of actually trying to get you to understand what really happened here. One, during the 5 days from Thanksgiving through Cyber Monday, Bed Bath used a new strategy, mass promotions, not just this endless couponing. They used mass promotions. And that strategy worked ridiculously well. Compared to the same 5 days in 2018, same-store sales were actually up 7.1%. That's gigantic, with strength in both physical and online business. That is huge. These are the most important holiday days of the year for selling. It is unbelievable to me that so many people are overlooking that spectacular number. They're not doing their homework. Two, Tritton's bringing the company out of the dark ages with plans to massively improve their digital presence, which is what he did as chief marketing officer at Target. I mean, the merchandise is great there. He had a lot to do with it. Three, Bed Bath's closing bad stores, but they're doing so in a disciplined way, while ensuring that they help clear out excess inventory. Let me give you an example. The company's delaying 20 closures in 2020 so that they can use those stores for clearance sales in the first half of the fiscal year. Makes sense. Four, believe it or not, customers still like and trust the Bed Bath & Beyond brand. The problems here had to do with terrible execution, not irrelevance. Also, the stores they don't look so hot. According to an NPD consumer tracking studio, Bed Bath's number one in brand awareness for housewares and home goods. Number one. Do you know that 79% of their customers have a favorable impression? That kind of shocked me. So maybe Tritton's got more to work with than you think, particularly you sellers. Five, after all the high-level resignations last month, Tritton's now bringing in his own team with, quote, the right talent and expertise to execute our new vision and inject new ideas, but also the right organizational structure to facilitate a more streamlined decision-making, end quote. Further, he added, quote, the volume of inbound interest has been extremely high, and I'm confident we will recruit top talent for these positions, end quote. Hey, that makes sense given his long and successful career in retail, although a lot of people think he can't attract good talent. I'm telling you he can. Six, the CFO laid out a plan to get rid of $1 billion in bad inventory over the next 18 months. Basically, they're clearing the decks of stuff that isn't selling, and that's exactly what the textbook says you should do to have a turnaround. Seven, Tritton finally curtailed the company's foolish, ridiculous, moronic, I'm Jimmy Chill, I'm sorry, ill-advised buyback. For years, Bed Bath burned billions of dollars repurchasing its own stock. They should have just put it in a chimney at much higher prices. It was the worst possible thing they could have done. Maybe the most stupid buyback in history. This quarter, Tritton only spent $1.2 million on buybacks, and he's backing away from it. That's perfect. 8, you know what sets Bed Bath apart from so many failed retail turnaround stories? It has a great balance sheet, which allows the company to approach things like asset sales from a position of strength rather than weakness, so get good prices. 9, they're already seeing improvement in their cost of goods sold. That's pretty amazing in 60 days. Tritton expects that to get even better as they build out their own private label brands. And then 10, this spring, Bed Bath's holding an investor event. Now, you need to be in this stock before that because the company is so poorly run that just some basic blocking and tackling from a seasoned pro like Mark can potentially work wonders. That event could be the catalyst for much higher prices. The bottom line, yes, I agree. Guilty. Bed Bath & Beyond had a terrible quarter. But it's a new CEO, and he's already made some bold moves to turn things around. And many of those initiatives are already working despite the stock price decline. This quarter was the last gasp of the old, incompetent management team. Do not let it scare you away from what I think could be a fabulous comeback story. Ara in Massachusetts. Ara!
Hey, Jim. Booyah.
Booyah!
I'm calling from Lexington, Mass, just trying to get your take on Bazoon. It seems to be getting a pretty big following. It had 41% sales growth in the past year. Just wondering with the embargo.
We follow this e-commerce solution company, and we have said over and over again, you know what? We're tired of hurting people in China. We like Alibaba. We don't need any other stock other than Alibaba. Alibaba is it when it comes to China. I want to go to Arthur in Maine, please, Arthur.
Booyah, Jim. Greetings from Kennebunk. How are you?
I am doing well, and you live in a great area, and great to have you on the show.
Well, thank you. I've listened to you for a long time.
Thank you.
My question concerns GameStop, GME. I am long in the stock in the mid to upper teens,
okay.
And my question is, Should I just bail out now and put the money to good use somewhere else, or do you see any foreseeable bounce to the upside?
I think it's
before it just
Arthur.
continued?
It's just on the wrong side of the trade, so to speak. I maybe you get a short squeeze like you got in Rite Aid, but I am hesitant to tell you to stick with GameStop. There's just many problems there. Okay, think beyond the headlines, please. This happens to be Bed Bath's last gasp of the old team, not the new team. I think it's going to be a real good comeback story for those who are patient. Much more Mad Money ahead. If its recent conference call is any indication, Lennar is keeping on the straight and narrow. I'm going to tell you why that's a good thing. Then, does your portfolio have what it takes to survive the unknowns in this market? I'll be the judge of that when we play MI Diversify. And all your calls rapid fire in tonight's edition of the Lightning Round. So stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.